Hi, I'm Delegate Glenn Davis, and as a member of the Virginia General Assembly, I've been concerned about Virginia's decline from being recognized as the best state in the nation for businesses to locate, to barely remaining in the top 25%. You see, while Virginia does very well in many of the categories that comprise this ranking, it's listed as the 37th worst state in the nation in the category related to the tax burden placed on in-state businesses, one of the two most heavily weighted categories. The issue is Virginia's outdated corporate income tax policies that create double taxation on Virginia companies when they provide their services to customers in other states. This tax policy is referred to as cost of performance, and it was the standard for decades starting in the 1950s. Essentially, states would assess income tax based upon where the service was performed, not where the customer receiving the benefit was located. So, if a company in another state provided services to a customer in Virginia, they would pay income tax on the associated revenue to their state, just like a Virginia company would pay income tax to Virginia when it provided services to a customer outside of Virginia. However, within the last decade, there has been a strong trend across the nation for states to assess income tax on the sale of services based upon where the service is delivered or the customer is located. Essentially where the market is for the sale of those services, hence the term market sourcing. Virginia's decision to ignore this nationwide shift has created double taxation on many Virginia companies. For example, when a Virginia company provides services to a customer in a market sourcing state, that state assesses income tax on the associated revenue since that is where the service is delivered or customer is located, and Virginia also assesses income tax because that is where the work is performed. In contrast, when a company located in a market sourcing state provides services to a customer in Virginia, that company does not pay income tax on that revenue to their state. And Virginia, still being a cost of performance state, would not assess income tax on that revenue either, essentially making that revenue income tax free for the company. To make matters even worse, Virginia's outdated policy gives out-of-state companies a competitive advantage over Virginia companies when competing for Virginia business opportunities. For example, a company located in a market sourcing state is not assessed income tax on revenue related to providing services to a Virginia customer. But a Virginia company would be assessed income tax on revenue related to providing those same services to that same Virginia customer. Since Virginia is on the way to becoming one of less than a dozen states who continue to use this tax policy, penalizing in-state businesses, it only makes sense that Virginia would have a greater difficulty attracting and retaining businesses, and that its business rankings would suffer. However, by Virginia adopting new tax policies, preventing out-of-state companies from benefiting at the expense of Virginia companies, we can decrease the number of businesses and jobs leaving Virginia, create new business and job opportunities for Virginia, and restore Virginia's status as the best state in the nation for business. If you would like to help, you can go to virginiageneralassembly.gov to look up your legislators and ask them to end this practice of penalizing Virginia companies and adopt new market sourcing legislation that would bring more businesses to Virginia, creating thousands of new jobs. This presentation was provided by me, Delegate Glenn Davis. For more information on this or any other state issue, please contact my office.